Good morning. Happy Thursday. Welcome, welcome. Let's see. I'm going to go through the normal. Let me make sure I'm actually streaming process. As you guys jump in here, happy if you guys want to let me know where you're watching from. I'd love to know. Otherwise, I'm just going to give everyone just a few moments to log in. There should be some resources in the caption. I'm also going to put them in the comments. Let's see if I can do that. Let's see if this is working. Yes, IRS employee. All right, cool PDF. And then the IRS SS8 form. I'm just going to throw those in the comments. All right, cool. Welcome, everybody. There we go. So welcome. Happy Thursday. I am Bree Beers. I am here every Thursday at 10 o'clock Colorado time, giving you guys trainings and Q&A sessions about all things related to tax. I forgot to put earrings in, so there we go. If you're new here, who the heck am I and why should you be listening to me? I am a CPA, a certified tax coach, an advanced tax strategist. I'm a fractional CFO. I have a bunch of titles, which means I either went to school, I passed a course, or I passed a test, honestly. But I also have over 20 years in accounting, 14 tax seasons under my belt, and what is not necessarily unique to me, but what helps me do my job even better is that we're going into my 8th year of being a business owner. So not only do I know the tax side of things, I also know the entrepreneurial side of running your own business. All right. And so out of those 7.5, I guess now years, excuse me, of being a business owner, I've spent probably 6, maybe even more of that time learning tax code, tax planning, tax strategy, and really trying to figure out how do I take these amazing strategies that are out there for all, really for all taxpayers, but specifically for those that are business owners or real estate property investors, right? How do I take that tax code and that we think is reserved for the rich and the wealthy and help all Americans, right? Help all the middle class, small business owners utilize those strategies. And so I've really worked over the last 6 or so years to figure that out. And I think we finally did. So I really believe, you guys, that tax strategy, tax planning, it's the first step in our working and middle class being able to build wealth. All right. Because if you think about it, it's like giving yourself a raise. I forgot to shut my door. Hold on. Sorry. If I don't, we're going to regret that. We're going to hear dogs and washing machines and all the things. But it's like tax planning and tax strategizing, you guys, it's like giving yourself a raise without actually having to do the extra work that comes with bringing in more revenue. All right. Make the same amount of revenue, spend the same amount of money in your business. So you have that same net profit as last year, but through some tax strategy, you have more money in your pocket. And you can use that pocket to reinvest back into your business to help scale and grow it. You can reinvest it, or you can invest it into your retirement, into your kids' education, whatever your building wealth looks like to you. All right. So today we are talking about employees versus contractors. And really, we are going to take the stance of being a small business owner. Why do I need to know the difference? What is the difference? How do I know the difference? How should I be handling this? But it's also important for you out there, if you are looking for jobs, or you're maybe figuring that side of this out. All right. Knowing the difference between the two will be important to you as well. But this training is really geared toward my small business owners. All right, we're going to talk about why understanding the distinction is important, the key differences between an employee and a contractor, the financial and tax implications of one over the other, and then I'll give you, I have given you a few resources and steps, which I've put in the comments and in the caption, I hope. So let's get going. So first, we got to start with, why is it important? Why is it important to understand the difference between an employee and a contractor when it comes to hiring people? All right, and hiring help. And the biggest thing, you guys, is the legal compliance. All right, the IRS and the Department of Labor have strict rules, and classifying workers can lead to audits, fines, lawsuits. And really what it comes down to, if you guys, I'm sure you've heard the news over the last couple of years, Lyft, Uber, if you drive for them, you're a contractor. A lot of the people who drive for them kind of, I don't know if they filed a lawsuit or if they just complained, but they're like, we should actually be employees. So that if you ever are to get audited or reviewed by the IRS or by the Department of Labor, they are going to be really looking at your contractors and deciding if they should actually be employees. All right. And we'll talk about why in just a moment. Well, part of it is the financial impact. All right. Employers, if you have W-2 employees, you are responsible for half of the payroll taxes. You are responsible for collecting withholding from your employees and submitting that all to the IRS and the state taxing agencies. You are also going to be responsible for any penalties that may exist if you don't file and pay those taxes on time or at all. And a lot of times, employee versus contractor, right? An employee is going to be entitled to benefits, all right? And that comes into our employer versus contract rights. All right, so employees, they're entitled, right, to minimum wage. They are entitled to overtime, unemployment insurance. If your business has additional benefits for employees, maybe retirement, healthcare, anything like that, an employee is entitled to all of those things, right? Contractors are not. Contractors are simply another business owner working with you, kind of like a vendor, right? They're another small business owner working with you in a certain capacity. All right, and the other thing is trust and reputation. If you're misclassifying your contractors and employees, it could damage relationships with workers and harm your business's credibility. All right, so let's talk about the key differences between employees and contractors. So we'll come back at the very end to what the IRS calls the three-prong test, but we're going to start there as well, because this is the important part, okay? So when you're hiring someone, you're like, are they an employee? Are they a contractor? I don't know. There are three differences, all right? And it's control, financial responsibility, and relationship. All right, and what that looks like for control. If they are employees, if they're W-2 employees, they're going to work closely, directly with the employer, right? They're going to have schedules, they're going to have methods, tools. The employer has control over when they work, how they do things. Whereas contractors are going to work independently, controlling their own methods and tools. This is one that's kind of tough, right? Because like I think about our virtual assistant, right? She is a contractor. However, I have certain deadlines still, right, that I need to adhere to. There's certain things I need her to do at certain times. So that was like a question for me. I was like, crap, is this person actually an employee? But I was able to, chat with an employment attorney, really talk about the scope of it. We're good. But this control piece is where it gets kind of tough to decide employee versus contractor, because a lot of times we are working with contractors, but we have expectations, right? And so you're like, wait a minute, is this an employee? Is this a contractor? And so that is the first key difference. Second key difference is financial responsibility. All right. Who provides the tools, the training, and covers expenses? All right. If it's the employer, if it's me as the business, I'm providing tools, I'm paying for the training, I'm covering the expenses related to them doing their job, they're employees. All right. Whereas contractors are going to cover their own costs. All right. And another big thing is that a lot of times contractors, they're going to work for multiple clients. Right. And the last part is the relationship. Is there an ongoing relationship with clear expectation of permanence? All right. If you bring on someone and you're bringing them on indefinitely, leans toward being an employee. Whereas contractors, usually specific projects, specific timeframes. Again, this is another one that might get a little cloudy when you think of, like I said, the virtual assistant or the admin piece, where you're like, yeah, I would love to find an admin that can just come work with me and be my admin forever. Like, is that an expectation of permanence? And it's like, yes, but also if that virtual assistant leaves, I am able to hire another one relatively easily, work contract. So again, there's some gray area. And so we'll come at the end, I'll talk about what to do with that gray area. All right, the big part, financial tax implications. All right, this is the piece. In addition to like the benefits we talked about, right? Like a lot of times an employer or a business may not want to hire someone on as an employee because they're going to be responsible for benefits, overtime, minimum wage, any benefits they offer to other employees, and they may want to hire them as a contractor to avoid that. That's not a good reason. All right. But the other one is the financial responsibility of taxes. All right. So for the business, employee versus contractor. Okay. So an employee, think about when we've all had W-2 jobs, right? We've all even if we own our own business and have for decades, we at some point were a W-2 employee, right? And when you're a W-2 employee, you have your pay, right? And then your employer takes out half of the 7.2% of Social Security, FICA, those and Medicare, those payroll taxes, right? You as the employee are responsible for part of that, then they're responsible for another part. And then you also have withholding, right? Your federal and possibly your state tax withholding. Your employer is responsible for holding all that out and then paying it, right? We've all received a paycheck, right? Our gross pay is $1,000. We received $700. Where did that difference go? It's the taxes that our employer withheld and submitted to the government on our behalf. So employers are responsible for that piece, right? They must withhold income taxes. They must provide a W-2, and again, may need to offer those other benefits. Whereas with a contractor, there's no payroll tax requirement from the business. All right. If I have a contractor and we agree to $25 an hour, I'm paying them $25 an hour. I'm paying an invoice that they send me, and that's it. Right? I do not have any additional tax responsibility for payroll taxes. I do not have to withhold any income tax or withholding. That is all on the shoulders of the contractor. Okay? And there's no obligation to provide any benefits. All right? So that piece is the part where sometimes you may get into like a battle, or you may be, as not the business, but the person below, you may be looking for a job, a W-2 job, and they may be like, hey, we're hiring on a contractor basis. And this is a good indication of why, right? They do not want to offer benefits or withhold your taxes. But they also, the flip side of that is they don't want to be responsible for, they just want to give you tasks and they want you to go do it. All right. So again, for workers, I just want to touch real quick in case there's some of you out there that are not business owners, but you're again in that position of looking for that job. And you're being offered employee versus contractor. When you're an employee, you do not have the responsibility of withholding taxes. Your employer does that. They pay it. And so it makes it easier for you to budget, right? Because you know how much you're actually bringing home, and you might get those employer benefits. Contractors, you are responsible for tracking and paying the taxes. So that's where we talk about estimated quarterly tax payments. And then you have to now file a new Schedule C, right? Because now you have a business. You are receiving business income. But the flip side to that, you guys, that sometimes gets missed is when you're a 1099 contractor, because you now technically have a business, you can write off your expenses related to doing that job. All right. So when you think about it from back to the employer point of view, when you think of the cost analysis of one over the other, the cost analysis for a contractor is super easy, right? If you and the contractor agree to $25 an hour, that's what you budget. When they're an employee, you have to budget their hourly rate. Because you're paying that, right? Then you have to take into account your employer half of the payroll taxes. You have to take into account the payroll processing fee that's involved with now having to run payroll. And you have to take into account any additional benefits that you may offer to your employees that you now have to pay for. So an employee tends to cost more than a contractor, generally speaking. And that is why sometimes you get into this battle. The flip side to that, you guys, is that a contractor's hourly rate should be higher than an employee's, because They are responsible for all this overhead. You're not just with an employee, you're just paying for labor, right? When you hire an employee, you're just paying for their time, you're paying for their labor. Whereas when you're hiring a contractor, you're paying for their labor and all their overhead costs. So you should be paying a higher rate to a contractor than an employee, because with a contractor, you no longer have all that additional overhead. Okay. So now we want to talk about the IRS's 3-prong test. How do you decide which one is right when you're hiring people? And again, it comes back to where we started, the behavioral control, the financial control, and the relationship. So when you think about the behavioral control, ask yourself, does the employer control how the worker performs tasks? All right. And again, this is the one that gets kind of dicey, because as business owners, we all want things done a certain way, right? So if we're hiring, for me, for example, if I'm hiring a tax preparer, if I'm hiring a bookkeeper, if I'm hiring an admin and an administrative assistant, there are expectations for how I want that work to look. Does that mean I control how the worker performs? That's one of those gray areas, right? Because I want the tax returns to go out a certain way. I want the bookkeeping to go out a certain way. Does that mean I control how the work is performed? You could argue yes, and say this person should be an employee. Financial control. This is a big one. All right. And this is not black and white, or this is black and white. This is not as gray as the other ones. So the question you ask for financial control is, does the worker have unreimbursed expenses or investment in their own equipment? All right. So employees, if they're an employee, all right, you're paying for everything. You should be paying for everything as the business, right? You're paying for their computers, their phones, their, anything they need to do their job, their software. All right. Or you're reimbursing for expenses. Maybe there's an agreement there where they're traveling and you're reimbursing them. Okay. That's an employee. A contractor they've got their own laptop. They've got their own way of doing things, and they have to pay for all of those things on their own. All right. And you're not reimbursing them for those tools. And then the last piece is the relationship. Is there a written contract? Does the worker receive benefits? This is the one that is most important. If you are going the contractor route, no matter what, you guys, with the contractor, you should have a written contract in place. Because while that's not going to automatically send any auditors, packing like, oh, nope, this is definitely a contractor because they have a contract. It is one piece of documentation and a piece that can solidify or can support your stance as hiring a contractor. Because if there's a contract in place, both parties have agreed to this payment arrangement, to to how work is handled. And as long as you can prove to the auditors that the work is being handled within the confines of this written contract, you will be good. If you have a written contract and let's say it says that the contractor is responsible for, all of these certain expenses, all right, but then you're paying them or you're setting, or, maybe the contract says certain what hours are involved or how many hours, the expectations. So the contract outlines those expectations, but if the scope of your relationship exceeds that contract, then that's another tier of the issue you're going to have. So, but have a written contract, all right, in place. And then keep in mind, you guys, that some states do have stricter rules. All right. California being one of them. And they keep getting stricter by the moment. So just because you pass the IRS test, you also need to check on the state test for where you're operating out of. All right. All right, cool. I'm going to just peek. Okay. No questions. Awesome. So resources in the chat and in the caption, you will see a few resources for you. The first one is, I can't remember what order I did this in. I think the first one is just a PDF. It's a very easy to read PDF per the IRS. All right, that kind of gives you the outline of that behavioral control, financial control relationship, and what, explains that. All right. The next one is called the IRS form SS8. All right. So the IRS, if you go through this, these steps and you still have no idea which way you should be leaning in terms of an employee or contractor, the IRS actually offers a service where they will step in and analyze your situation for you and tell you. All right. I've never used it, but it's there. I have, though, however, used the SS8 as a guide with clients to determine which way they should go. So whether you actually file the SS8 with the IRS and actually get their input, there we go, or you just use it as a guide, it is a great guide to kind of help you decide which one of those methods or which one of those routes you should go. And if all else fails, you guys consult with a CPA or an attorney for guidance. It says CPA or attorney. I'm going to go with attorney because really this does come down to the legal side of things. The tax side, legal side, and it comes down to the legal side. All right. So last thing is just if you're ever in doubt and you go through the spreadsheet and, all the things and you still do not know, you should err on the side of employee. When you hire employees, you're not audited for that because that's what the audits are for. The audits are to find contractors who should be employees. If you go, and so hiring employees or hiring them as employees is going to be less risky with the consequences. If you hire contractors, have that contract in place that outlines the relationship and the financial control and the behavioral control, and then follow it. All right. If you do those 2 steps as a contractor or hiring a contractor, you should be good. All right. So next week, you guys, we're going to talk about self-employment tax. All right. We're going to talk about what it is, who it applies to, and why it's important. Because when people are doing their estimated tax payments or quarterly estimated tax payments, a lot of times self-employment tax is missed. So we're going to talk about that. All right, so let me know if you guys have any questions. I have the whole schedule out for the rest of tax season, so we'll be here, I think, every week. There's 1 week I won't be here, but it's not till March. So other than that, you guys have a great Thursday, have a great weekend, and we will see you next week. Bye.